Welcome all of you. This is the course Financial Accounting. As a part of this course, we are going to see the bank reconciliation statement. Let me introduce the course module Bank Reconciliation Statement at the outset, that it is a statement which is prepared to reconcile the balances between the cash book bank column as well as the passbook. What is the purpose of this bank reconciliation statement? Why is it prepared? And what is required? And what are the methodologies and procedures to be observed for the preparation presentation? These are all the nuances which are going to be articulated in this part of the lesson. Let me tell you at the outset, at the end of this course, you will be definitely able to understand the reasons for the difference between cash book balance and passbook balance, and also try to ascertain the amount of such differences. And you will be able to learn the design of a bank passbook. You will also learn how to resolve such difference in a systematic manner, and also finally understand the purpose for preparing the bank reconciliation statement and its utility. Suppose you are a trader or you are having a firm and you will be maintaining so many accounting books. One among them is called cash book, and all the cash receipts are recorded and payments are made recorded in your cash book, and the cash book is simply maintained. It is called the simple cash book. And if you take this cash book into two dimensions, one is to record the cash payments and receipts, and the other is to record the cash equivalents such as the banks and bank relevance, so that you will provide bank column. Such bank column will reveal one kind of balance, and cash column will also reveal another kind of balance. But that cash column balance is yours and bank column balance is also yours, but should be compared with the balance shown by the passbook. That passbook was a traditional term, but today everybody is using the statement. It is called the bank statement, which is sent by email or any other mode today, digitized. Being digitization, being core banking solution that comes to exist, every bank is sending the statement to the firm or the entity in a form of a statement, bank statement, in mail or any other mode. So that you take that word bank passbook or bank statement, which will show another kind of balance that should be compared with the bank column balance and the passbook's balance. Whenever the balances seen, it does not match each other. If it does match, there is no need for bank reconciliation statement. If it does not match, you need to know the differences. And for such differences, what are the reasons, what are the causes you have to analyze. Such analysis in terms of a statement is called bank reconciliation statement, which is to reconcile the balance shown by the bank column of the cash book as well as the passbook or bank statement. With this introduction, let me brief explain the bank is what. A bank is a financial intermediary and a money creator that creates money by lending money to a borrower and thereby creating a corresponding deposit on the bank's balance. This is what the nature of work of bank, that collecting deposits and lending loans. Right? Between this, the banks are functioning, and these are all the two main kind of activities that are carried out by the banks. Let us see cash book and passbook. See, the passbook is a booklet wherein the banker records his customer's account as it appears in his ledger. Whereas the cash book in accounts are simple accounting books that are used to enter basic data about cash payments and receipts. See here the cash book, which is recorded with the receipts and payments, whereas here the passbook, which is recorded with all credits and debits. Right? The reconciliation of the cash book maintained by the customer and the passbook maintained by the bank is going to be seen everywhere in this chapter. And of course, this lesson is to inculcate the learners to understand how is it prepared the bank reconciliation statement and how far the transactions are recorded in cash book so as to arrive at the balance and also the passbook. What is the purpose of bank reconciliation statement? Very important that we need to have some kind of object while preparing such kind of statement. Here it is the purpose. It is said to be the purpose for which the bank reconciliation statement is dealt in. There are so many number of business units in the modern business world, and all these business units maintain the different cash books, simple cash book or columned cash book. And that cash book meant for recording cash and bank transactions either generally or individually in cash and bank columns. The cash book provides the purpose of both the cash account and the bank account. It demonstrates the balance of both at the end of a period. Bank also maintains an account for each customer in its book. The entire deposits by the customer are recorded on the credit side of his/her account, plus all withdrawals are recorded on the debit side of his/her account. A copy of this account is on a regular basis sent to the customer by the bank. This is known as a passbook or today's digitized bank statement sent via email. So all these statements today sent via email, or we are getting the SMS, and it is usual to tally the firm's bank transactions as recorded by the bank with the cash book. This is what the basic purpose of the bank reconciliation statement. See, cash book provides the purpose of both the cash account and the bank account, and bank account is also having some kind of purpose for maintaining the customer account in its book. However, sometimes the bank balances shown by the cash book and that shown by the passbook do not match. This is what the fulcrum of this bank reconciliation statement. In case the balance shown by the passbook is different from the balance revealed by bank column of cash book, what else to be done? There should be the reason to be found out, and all these reasons to be known with the causes of differences and also to be reconciled. And at the time the business firm will discover the causes for such differences, and it becomes necessary to reconcile them. In order to reconcile the balances of cash book and passbook, a statement is prepared. This is what the topic. Cash book and passbook, a statement is prepared. This statement is known as the bank reconciliation statement, shortly known as BRS. See, bank reconciliation statement. It is a statement prepared to reconcile the difference among the balances as per the bank column of the cash book and passbook on any given date. Suppose a cash book is balanced at the end of the month, and that cash book's balance at the end of a particular month should be compared with the particular month's statement sent by the bank. Suppose a bank statement is sent for January 2019 and the cash book prepared is to be taken for January 2019. That reveals the bank balance, and such bank balance of the passbook or bank statement is also to be compared. This is what a transactional analysis that happens to be. Between this, what kind of transactions that increases one kind of balance and decreases, and vice versa. This is what to be understand as the difference and causes of difference. What is bank reconciliation? It is an accounting versus bank in accounting, the cash book is prepared and cash book will have the bank column, such will reveal the balance of such cash book. And bank statement is prepared and bank statement that will also reveal the cash balance at the end, and such balance is one kind and the other balance is the cash book, and both of them are to be compared and these differences are known and explained by making the differences. The bank reconciliation statement is at the end prepared. Let us see the definition for bank reconciliation statement. A bank reconciliation statement can be defined as a statement prepared at periodical intervals with a view to indicate the items which caused disagreement of cash book and the bank passbook on any given date. Suppose you issued check worth 10,000, so that you have entered as payment in cash book. That decreases cash book balance. Whereas whom issued not presented for payment, so that keeps your balance of bank account higher, so that payment that become unpaid till date, so that it keeps your passbook balance plus. So difference is that here minus, here plus. Why such difference? Here it is paid and it has been made as payment in the book recorded, but the same has not yet been presented for payment became unpaid till the date on which we prepare or find out the reason of the balances and their differences. This is what a simple example for the bank reconciliation. It is prepared normally at the end of each month by comparing the entries in the cash book and the passbook. After scrutinizing the bank statement and the cash book, the balances are reconciled and then a statement is prepared known as bank reconciliation statement at the end. Need for reconciliation. What is the need for reconciliation? Why do you do this reconciliation? Is it necessary? Why do we do the reconciliation? We should have analyzed the purpose for which we do the reconciliation and the objective for which we are doing this reconciliation, and the aim of this reconciliation is what? Is it need of this day? Yes. How? On any date, the balance is shown by bank column of the cash book, by bank column of cash book, and balance is shown by the bank statement should be the same. If the balances does match, no need of bank reconciliation. But in practice, it is quite impossible, so that this would not happen always due to several reasons, and in such a case, the reconciliation of the two balances is to be made or done systematically and significantly to reveal the results and their accuracy. Hence, this statement is prepared. So, need of the hour is that every statement, every bank reconciliation statement will have a kind of differences between both the balances, so that we are preparing. All the balances revealed by all the books, that means cash book, bank column, as well as the bank book or bank statement, will not be the same, and to match with those balances and what are all the distances between these balances differences, we need to prepare the bank reconciliation statement. What is bank reconciliation actually? An organization's bank column of cash book balance often differs from the balance shown on the bank statement prepared by the bank. Why? There are several reasons. That reasons are going to be found out differently. That makes the disagreement between the two balances due to the conditions on which the transactions taken place. Reasons for such disagreement. We said earlier that there are so many reasons for the differences. What are the reasons? Now, checks deposited but not credited. Checks deposited. See, you received a check for 1,000 rupees and deposited with the bank, not yet credited. Not yet credited. So what will happen? usually this 1000 rupees will be higher in cash book, and that 1000 rupees not credited in passbook keeps the balance lesser. Checks issued but not debited. It is a payment like, say, 2000 rupees, and it is a payment like in cash book, and the same payment not presented that become unpresented till date, so that it keeps the passbook's balance plus and cash book's balance minus. Bank charges and insurance expenses are directly paid by bank, being expenses recorded in passbook as payment, which keeps passbook's balance minus and cash book's balance plus, being not recorded in cash book. Interest and commission received are the incomes received by the bank and entered in passbook, which keeps the balances higher, which has not yet been brought into the notice of the trader for entering into the cash book, that keeps the balance minus. Then come to standing instructions for debits and credits. All standing instructions of the trader given for debit and credits will be done by the banker in passbook, will be known by the trader only after the receipt of the bank statement. Checks dishonored. All checks dishonored. Definitely the checks dishonored will have to be brought in and to be entered into the cash book. Until that, the cash book's balance will be higher always and passbook's balance lesser. This is for the checks received and deposited dishonored. And for so many other reasons, the bank balances differ from the bank column of cash book balance. See, things the bank may not know yet. The checks paid to creditors who may hold on to them before taking them to the bank days later, and deposits made into the bank on or near the date the statement is prepared, and if so, they will be included in the next statement. This is what the bank may not know yet. Because of that, the checks paid creditors, they will be holding the checks, and they won't be coming to the bank for presenting for payment. And deposits made into the bank, which is near the date or the statement is prepared, this may not have known by the banker to be included in the statement. And things the organization may not know yet, and many transactions the organization may forget or ignore at the time of preparing the final statement. Standing orders and direct debits given to the bankers will be forgotten by the trader, and the bank always remembers them and do enter, pay or receive. Consistently, the banker will do all those things. Right? How much bank charges are, until the bank tells them in the statement, the businessman or the trader or the firm or the entity will not know and will not enter or record in the books. Deposits made straight through the bank rather than to the organization. Deposits made straight through the bank rather than to the organization will be known by the firm only after the bank statement is received. See, what are the causes for the differences? Causes for the differences in bank balance. The transactions entered in cash book not reflected in passbook, and the transactions reflected in passbook not recorded in cash book. The checks deposited not yet collected. Checks deposited not yet collected but entered in cash book as a receipt. And checks issued not presented for payment recorded in cash book as payment. And checks and bills recorded as deposited bank into bank but not actually deposited is a receipt. And errors in cash book may be either plus or minus, or receipt side or payment side that happens. That should be carried forward. And these things are to be compared with the transactions reflected in passbook, not recorded in cash book. But anyway, these are not relevant to this. These are not relevant to this. Don't take it in such a manner. All those things are different, and these things are also different. Checks are cash directly deposited by the customers. So this is a kind of receipt in bank in our account and recorded or credited. And payments made by the banks. This is also a kind of payment as per our standing order and something else the bank do and debit our account. Then bank charges and interest debited are the payments certainly made by the banks and debited our account. Checks dishonored reflected in passbook. This is also for either credit or for debit that happens according to the condition. Errors and excess debit or credit by the bank. This is also plus and minus that happens according to the transactional nature. So everything are the causes for the differences in the balances between the bank and cash. How to prepare the bank reconciliation statement? See, bank reconciliation statement called BRS shortly is prepared before preparing the final accounts in order to reconcile the difference between the balance in passbook and cash book. See, the following steps are taken for the preparation of such BRS. See, either the cash book or passbook balance is to be taken as the base point. See here, this is BRS, bank reconciliation statement, in a columnar form. Prepare this. Either one book's balance take here, add the items are to be added and deduct items are to be deducted. So all items are added here, all items are deducted here. So other books balance will come here. Other books balance will come here. But these additions and deductions are to be made either using a skeleton or a format given in a text. But we are going to analyze in this course only the transactional analysis, putting some symbols. It's a technique called symbolization, what we use, and according to which the transactional nature is analyzed and put plus minus symbols under every book, either cash book or passbook or both. And which book is the base book? Skip out the symbols there and take the symbols in another book, according to which you take the transactions added and deducted, so that you will get other books balance at the end. What is step 1? Either the cash book or passbook balance is to be taken as base point. Comparison between the items of cash book and passbook and the balance or a difference to be adjusted with the base taken. Arrive at the other balance quite opposite to the one taken as the base after all adjustments over at the end of the process. Preparation of bank reconciliation statement. To reconcile the bank balances are revealed in the passbook with the balances shown by the cash book. The bank reconciliation statement is prepared. That's what we know already. After recognizing the reasons of differences, the bank reconciliation statement is prepared without making change in the cash book. This is what very important. Without making change in the cash book's balance, they will take it but reconcile. Right? We may have the following different situations in connection with the balances while preparing the bank reconciliation statement, called different situations. See, First situation is the favorable balances. The debit balance as per cash book is given and the balance as per passbook is to be ascertained. And credit balance as per passbook is given and the balance as per cash book is to be ascertained. See, the cash book as well as the passbook's balances are to be arrived and cash book balance is kept at one side and passbook balance is kept another side. And there will be both favorable or unfavorable that comes to exist, according to which we will have to prepare the statement. And unfavorable balance, what is that called? Overdraft balance. So credit balance as per cash book or the balance as per passbook. Debit balance as per passbook and the balance as per cash book. So either this balance is to be taken and arrived at the another balance or vice versa. Let us have some things to remember while preparing always the bank reconciliation statement. The bank statement and the bank account are a mirror image of each other, that you know pretty well. The bank statement and the bank account are a mirror image. Bank account is an account maintained by the banker and statement is prepared at the end. Statement is prepared at the end. So that statement will reveal what the account reveals. That you know, that's why it is called mirror image. That is, the payments made are recorded in the credit column of the bank account, but the bank shows them in the debit column of the statement. And the receipts are shown in the debit column of the bank account, but appear in the credit column of the bank statement. So bank column is here mentioned and named as bank account and statement at the end. Both of them are to be similar. If these balances does match, there is no necessity of preparing the BRS. But in practice, it is quite impossible and highly impossible to have the same balances in both. And for arriving at the differences, causes, we need to go for the bank reconciliation statement. How to reconcile the two? See, find the differences in step 1 by taking of all the matching items. So there are two kinds of items. One is matching items. Do understand? The other is non-matching items. Non-matching items. Where you find the matching items and non-matching items? One is bank column of cash book. See, column of cash book, and another balance is passbook or a bank statement. Understand this? Bank statement. So, bank column of cash book and passbook balances are to be analyzed, and what are all the transactions for a given period or a specific period or at a given point of time in bank column of cash book as well as the passbook to be taken, and see all the matching items, and all the matching items are to be noted down and circled. So update bank statement and bank account and circle the items for which there is no match. So circle is for no match, and for matching you just put a tick mark. For matching items put a tick mark. For circle put a circle for non-matching items, and update the account using circled items in the statement, and prepare a bank reconciliation using the circled items in the bank account. Why? The circled items that causes differences. So conclude with this. The basic and fundamental concept behind is that what are all the items that keeps non-matching the balances of cash book and passbook. That is what to be considered in the bank reconciliation statement, and it is also to be prepared and presented in a periodical interval for the purpose of knowing the differences between the balances and to escalate such of the transactions to be completed. Right? For this purpose, we need to know, being an entity or firm, the reconciliation of the bank balances shown in bank statement or passbook, as well as the balance shown in the bank column of the cash book. We shall move on to the further illustrations on the preparation and presentation of bank reconciliation statement. From the following details, prepare a bank reconciliation statement as on 31st March 2009 of an organization named CD Associates. See, in this organization, the details were given by them for the preparation presentation of BRS. The balance as per cash book is the base balance which they gave 11,600 rupees. Checks issued but not presented for payment up to 31/3/2009 4,000 rupees. Checks sent for collection but not collected up to 31/3/2009 3,000 rupees. The bank had wrongly credited the firm's account 400. So firm's account wrongly credited 400 rupees. Interest on securities collected by the bank directly and credited in firm's account 800 rupees. See, out of these 5 informations, the first is the base balance upon which you have to prepare and present the BRS, and also to find out the other books balance, as we are seeing both the books balances in the bank reconciliation statement for the reconciliation purpose. Right. Let us analyze the transactions. Checks issued does mean the payment, and base book is cash book, and what we need, passbook. So let us start the symbolization using the transaction and its impact on the books. Checks issued but not presented for payment up to 31/3/2009 is a payment which was entered in cash book and might not have been remitted in their bank account for the collection to whom it is issued, so that it shows increased bank book balance, passbook balance of the trader CD associate. Second, checks sent for collection. Do you understand? The checks sent for collection but not collected up to 31/3/2009. So checks sent means that the checks which have been received and deposited, remitted in our account, CD Associates account in bank, not sent for collection. But whenever we receive this checks, we would have entered in cash book, that increases the cash book balance. Once it is collected by the banker alone, it will be credited in our account. Till that time, it shows the lesser balance. Come to the next. The bank had wrongly credited the firm's account. Bank had wrongly credited the firm's account. So wrong credit of bank, that increases the balance of the trader, whereas such a wrong credit not entered or wrong credit not made in cash book, that keeps lesser the bank balance comparatively with the passbook balance. So cash book bank column, that shows lesser. Then the interest on securities collected by the bank directly and credited by the bank directly into the account of the trader. This is an interest income which has been received by the bank directly as per the instructions of the trader. He might have informed the bank that these are all the investments and securities for which I have given this account number, so that it will be credited to the account, and you please bring to my notice at the end of every specific period, so that I would be entering into my cash book. This is what also one kind of standing instruction for the receipt from the securities, investments, bonds or mutual funds, whatever it is. So such a kind of income received by the bank directly credited increases the passbook balance, whereas the same has not yet been brought to the notice of the trader for entry into the cash book bank column that keeps lesser the bank column of the cash book. So which book you need? The passbook. Take the passbook symbols and skip out the cash book symbols. So according to these symbols, you just add and deduct the transactions, taking the balance as per cash book as the base balance in the bank reconciliation statement, so that you would get at the end the balance as per the passbook. This is what the basic analysis and preparation of the BRS, and how do we need to present. Let us see in the next page that balance as per cash book 11,600 and checks issued but not presented for payment as symbolized added, and checks sent for collection not collected as symbolized deducted, and the wrong credit as well as the interest received as symbolized added. So 4,000 plus 400 plus 800, 5,200 rupees added with 11,600, so that the total become 16,800. And there are some deductions, one kind of deduction, checks deposited but not credited. So only one deduction, 3,000 rupees. So the balance as per the passbook that shows 13,800 rupees. This is what the basic principle and idea or the procedure, the steps for the preparation and presentation of the bank reconciliation statement. Let us go to the another example. Prepare a bank reconciliation statement as on 31/12/1993 from the following details. What is given again? The balance as per cash book. Balance as per cash book. So what book is given? Take for symbolization the cash book. And what book is required? The passbook. Right. Check deposited into bank but not collected. Check deposited into bank but not collected 675. It's a kind of a receipt. Check deposited into bank. Checks received and deposited after having entered in cash book that keeps cash book balance increased. Whereas the same has been remitted to bank, deposited into bank, but our banker has not yet started the process of collecting or the realization of such kind of check, so that it keeps the passbook balance lesser. Then checks issued but not presented for payment. Checks issued but not presented for payment. The first is deposited, not collected. The second is check issued but not presented. So check issued but not presented for payment worth of 879 might be the payment might have been entered in the cash book, keeps the cash book balance minus, but whom issued? Such people or such person who has not yet deposited into his account for the collection that keeps our bank book balance plus. And the bank charges debited. Bank charges debited in the passbook 20 rupees. It's a charge being an expenditure or expense. The passbook balance is deducted with 20 rupees, which has not yet been brought into the notice of the trader to enter into the cash book, so that it keeps cash book balance plus. And interest credited in the passbook. See, direct interest that has been credited in the passbook of a trader for the worth of 15 rupees may be taken into account as an income and recorded in the passbook increases the balance of the passbook or bank balance. Whereas the bank column of cash book, which has not yet been entered with such a kind of interest income, so that it keeps cash book's balance minus. So according to these symbols, take the passbook symbol, not the cash book symbol. As we had the cash book as the base balance, we need to proceed with the symbols that has been entered on the side of passbook. So we shall go to the presentation of the reconciliation statement using this symbol minus plus in a chronological order, and for every transaction we need to apply. See here, the balance as per cash book 7,225 base balance, and check issued but not presented for payment. It's a second item we said to be added, and the fourth item, interest credited in the passbook, which is also said to be added, both of them added, so 894. And in a chronological order, the first and third transactions are 675 and 20, we said to be deducted from the base balance, so as to arrive at the balance as per the bank passbook. So the additions made 8119 and deductions 695, so that the closing balance or the balance what we require, the passbook balance. It is also a basic question to make you understand what is the principle and practice of preparing and presenting the bank reconciliation statement. I hope that you would have understood and you would be able to know the nuances of preparing the bank reconciliation statement fundamentally. And in the further questions, we are going to see the comprehensive transactions which has been happened between the cash book bank column as well as the passbook. See, it's a third illustration. On March 31, 1996, the cash book of Parameshwaran, a person, a trader, or an entity or owner of a particular firm, showed a bank balance of 4,850, but don't take it as bank balance. It is a bank balance in the cash book. So cash book bank column. So which book is given? Cash book. Which book is required? Passbook. So make the transactions analyzed and also know the impact on which side it gets increased or decreased according to the condition. While verifying with the passbook, the following facts were noted. Checks sent in for collection before March 31, 1996 and not credited by the bank amounted to rupees 845. Only 845 rupees checks sent in for collection. So that what we would have done, we would have entered in cash book that keeps cash book's balance plus. The same has been remitted, sent for collection to the bank. Bank has received it, and bank in which our account is not yet credited because of the checks uncollected till 31 March 1996. But after that it might have been credited, but we need not have such transaction. Until March 31, 1996, the transactions are to be taken into account for the comparison. And checks sent in for collection has been entered or might have been entered as a receipt in cash book, which has not yet been credited by bank, keeps passbook's balance lesser. The second item is checks issued before March 31, 1996, but not presented for payment amounted to rupees 885. Understand this? Checks issued before March 31, 1996 might have been entered as a payment in cash book and it keeps cash book's balance minus. Whereas the same issued to whom he has not yet remitted to his bank account for collection, so that it keeps the unpresented check that keeps our book balance, our passbook balance higher or plus. The banker has charged a sum of rupees 100 towards the incidental charges. See 1 and 2. First is incidental charges 100 rupees. The banker has charged a sum of rupees 100. So banker has charged a sum of rupees 100 means a bank charges debited in passbook that keeps our passbook balance minus. Whereas the same has not yet been brought in to the notice of the trader to be entered in cash book that keeps cash book's balance plus. Being such an expenditure or expense not yet been entered keeps the balance normally higher. And whenever you enter such balance, that would decrease the closing balance of or the balance of the cash. Okay. Come to the second. The same banker has credited interest 250. So banker credited interest to 250 means it's a bank income for ourselves received by the bank directly and credited to our account that keeps our account balance higher. Do you understand? This credited interest, being it is an income, it might have been credited to our account, increases the balance of our passbook. Whereas the same has not yet been brought into the notice of a trader to be entered into the cash book bank column so that it keeps the cash book balance, bank column balance lesser. The very next is the banker has given a wrong credit for 250. Whenever the wrong credit given by the banker that keeps higher the trader's bank balance. Do understand such balance will keep the trader's account always higher, but the same balance not yet been shown or brought in to the cash book bank column, it keeps minus the balance. Then go to the other, Mr. Nair has paid into bank directly a sum of rupees 300. So Nair directly paid not being entered in the cash book. What does it mean? Actually, it is a kind of income received by the banker directly on behalf of ourselves and which have been entered into the credit column of the passbook and keeps increases our balance. The same has not yet been brought in to the notice of the trader so that such a kind of receipt which would not have been entered in cash book's bank column that keeps lesser the cash book balance. Come to the next. A check for rupees 200 sent for collection and returned unpaid. Check for 200 sent for collection, returned unpaid. Whenever you send a check for collection, before that you would be entering, it is the practice, you would be entering into the cash book bank column so that it keeps cash book balance plus. Whereas the same has not yet been collected by the banker but unpaid because of no balance, so that that check has been returned by the banker to whom it is sent for collection, so that it keeps our passbook's balance lesser. So whenever you receive, you tend to receive, or usually you receive a check, it would be entered in cash book bank column as a receipt, will be deposited into bank account later, and such of our banker, our bank account credited only when once the other bank, the check issued bank, credited or sent the payment to be credited in our bank account, then only it would be realized. Till such time, it would be taken as only the checks deposited but not yet collected, or maybe unpaid or maybe returned. So with this, you take the passbook's symbols and not cash book symbol. So what symbols are required? In a chronological order, minus, plus, minus, then all, plus, 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 and check for rupees 200, check for rupees 200, sent for collection and returned unpaid. Sent for collection, so that we would have entered in cash book, and returned unpaid. So bank balance has not been entered in the cash book. So that you take, this is not the symbol. See this? Not entered in the cash book, not passbook. So in cash book, it is plus. Don't take it. See this? Minus and plus. So according to which you treat every item minus, plus, minus, then all plus. Okay, right? Let us go to the reconciliation statement. base balance, balance as per cash book. The first transaction 845 as said to be deducted, it is deducted now. And the second transaction 885 rupees as said to be added now. And the third transaction 100 and 250. 100 is deducted as incidental or bank charges and 250 interest is added. Then the other items, that the wrong credit 250 added and the direct deposit added and check sent for collection but returned unpaid to be shown as 200 rupees deducted. So what are all the things done? 4,850, 1,685, 6,535, 1,145. So 4,850 is added with this, additions made, and this is deducted. So 5,390 is the balance as per the passbook. So once we have taken cash book and we have arrived at the passbook, what are the complicacies here or comprehensive transactions? One is wrong credit and the other is check sent for collection but returned unpaid. We shall go to the next exercise. From the following particulars, prepare a bank reconciliation statement as on 31/3/1999. Here it is started with the overdraft balance, so unfavorable balance as per passbook. So which book is here given? Passbook. Which book is required? Do it, cash book. So both the books are taken now. Overdraft balance as per passbook is 13,095. We shall analyze the transactions. Check deposited in bank, not recorded in cash book. Check deposited in bank, not recorded in cash book. Though it is a receipt received by the bank, received by the customer and sent deposited into bank for collection, not yet been entered in cash book, that keeps the receipts of the cash book bank column lesser. Whereas same has been deposited into bank might have been credited and entered in bank passbook, that keeps plus. The next item is check received and recorded in cash book, not sent for collection. Check received, recorded as a receipt, might have been entered in cash book, that increases the cash book's balance. Whereas not sent for collection, once you received, you should have remitted to bank account. You should have remitted the same checks in your account with the banker. Otherwise it would not be credited. So that for collection and credit of your receipt, and you have to go and approach the bank, remit the checks into your account so that it will be getting credited. Until it will not be credited by the bank, keeps your passbook's balance minus. This is 115 rupees. Check issued for 15,075, but checks for 9,075 alone were debited. Whenever issues made, that issues would have been entered as payment in your book. So bank column is showing that payment minus. Then out of which 9,075 alone were debited in the passbook means 9,075 alone were paid by the banker to the concerned to whom we have issued the checks. So balance difference of worth which has not yet been paid out of bank account, that keeps bank balance plus. And what extent it is plus? 15,075, 9,075. So difference is 6,000. So to the extent of 6,000, it has not yet been paid out of our bank account. Checks paid into bank for 9,400 paid into bank, but checks for 3,550 alone not credited in the passbook. So you have received a check worth of or checks worth of 9,400 and would have been entered as receipt in your bank passbook. Sorry, in your bank column of cash book. Plus checks paid into bank for 9,400, but checks for 3,550 alone not credited in the passbook. Not credited in the passbook. So worth is what actually that keeps the passbook's balance lesser. Worth is 9,400 minus 3,550. So this is what to be made out in your reconciliation, because alone not credited. So what might have been credited? The difference between these two might be so what is this? See here, and 9,400 out of which 3,550. So 9,400 minus 3,550 is 0, 5, 0, 0, 13, I think 8, then 8 minus 3, so 9,400, in which 5,850 has been credited, and the rest of 3,550 has not yet been credited. So that out of the paid into bank 9,400, we would have increased, showing this plus the other is minus. So do understand, the insurance premium 250 paid by bank but not credited in cash book. Paid by bank but not credited in cash book. So but not credited insurance premium is a payment that keeps lesser the passbook balance and higher the cash book balance because of the same insurance premium expense not yet been entered in the payment side of bank column of cash book. Then bank charges 30 was recorded twice in the cash book. Bank charges 30 was recorded twice in the cash book. Twice the cash book had the expense, it keeps lesser the cash book balance but not the passbook, as wherein only one time the charges were made. The interest of 1,400 debited in the passbook but not recorded in the cash book. Interest of 1,400 debited in the passbook. So interest debited is lesser or is made lesser the passbook's balance, and debited in the passbook not recorded in cash book, which would not have been entered as a payment in cash book, that keeps cash book's balance plus. So see this, there are so many transactions that keeps first minus, second plus, third minus, fourth plus, fifth plus, sixth minus, and seventh plus. So what we need? The book, cash book. What we don't require, passbook, keep aside. According to this cash book's symbol, you treat all these transactions in the reconciliation statement so that it would be completed. And we would get definitely the opposite balance cash book either be a favorable or unfavorable. Let us see the BRS. See, have a look into this. Balance as per passbook, the overdraft has been taken as the base balance, and checks received but not sent for collection. Checks received but not sent for collection. So this is added, the second and third, everywhere you just have a look. 1,075, 13,095, 3,550, and insurance premium as said to be added, then bank charges deducted, checks recorded, issued but debited only, so 6,000 rupees difference, and here only not 3,550 entered, added, and interest charges. So all these things are added now. See here. Once 6,275 added to the base balance, what would have been the balance? Seems to be 13,095 plus 6,275. That might be 19,000 and odd. No. The base balance is minus. So put a symbol here. It is minus, unfavorable, minus and plus. So what happened? Again the excess of minus, and the symbol is minus. Minus and minus, minus and minus, add up the total minus. So that 12,955 rupees is the balance as per cash book overdraft. So this overdraft balances may be known as unfavorable. May be known as unfavorable. So do understand? It's a comprehensive illustration. Here, what are all the transactions that are very comprehensive? The checks paid into bank not credited to the extent, and checks issued not debited, debited only to the extent, and bank charges twice entered in the cash book. And all others are very similar to the transactions what we saw earlier. We shall go to the next. From the following particulars, prepare BRS. Bank OD, that means unfavorable, as per cash book 5,000 rupees. Come here, cash book is given, and what book is required? Passbook. So start symbolizing the effect after having analyzed the transaction. Checks sent in for collection but not collected and credited, 600 rupees. Checks sent in for collection but not collected and credited, 600 rupees. So sent in means the receipt which we would have entered into the cash book bank column as a receipt that keeps the cash book's balance higher. Whereas the same remitted to the bank, sent for collection but not yet been credited in our account, which might keeps our bank's balance lesser. Bills dishonored, debited only in the passbook. See, this transaction is a kind of transaction, receivable transaction, might have been received from the debtor in the name of bill, and in terms of bill, the bills would have been received earlier, but now it became or it would become matured and remitted to our bank account. So that what we would have done, that in cash book we would have added such that increases the balance of cash book, and we hope that it would have been supposed to be collected by the banker and credited our account, but not had been done because of the dishonor. So that it has been entered in the passbook as unpaid, unpresented, uncollected, so that it keeps the passbook's balance minus, whereas not yet been entered in the cash book, that keeps cash book's balance higher. Then come to the insurance premium paid by bank. As per the standing instruction of the entity or a trader or a firm, the insurance premium is paid, would have been deducted immediately. Now that has been done by bank, but not recorded such an expense in the cash book, that keeps cash book's balance plus, whereas passbook balance minus. Undercast of debit side of cash book. Undercast of debit side of cash book. Undercast means casting is nothing but totaling or summing up. Undercasting means under totaling or totaling very lesser or totaling decreased, or totaling seems to be short of total. Such undercast of debit side that decreases the receipt so that the receipt would be lesser. Whereas such undercast not had been entered into passbook or not had been happening in bank, so that the passbook's balance kept higher always. As the bank doesn't have any idea about the undercasting of debit side made in cash book or such thing that should not be brought in even to the bank, because it is a kind of mistake of a trader while preparing the cash book happened, and he has to correct it. Till such it keeps lesser the cash book's balance because the undercast of debit side. When undercast of credit side means opposite, that keeps higher the balance because of the payment which has been undercast. Then bank charges of rupees 20 entered in the passbook twice. So bank charges of rupees 20 entered in the passbook twice. So that keeps the passbook balance additionally deducted or lesser, whereas the same thing has not yet been made in cash book, that keeps higher. So see the symbols according to which you treat the transaction, which book is given and what is the base book, cash book. So what book we need? Passbook. So take the symbols of passbook, minus, 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 plus and minus according to which the transaction. Go there, the unfavorable balance as per cash book. That means overdraft balance. So 5,000 rupees and 600, 1,150 and 1,790. In this answer, what I have made, all minuses are taken as plus in reverse so as to give correct and direct answer. And also to make you understand, whenever this has happened in the case of the transaction, you can get it reversed also, putting the symbols originally and take it in reverse manner and reverse term and put all the items in a reversal manner in the statement. That would also give the correct result. Okay. And all plus items, what we have done, now taken as minus. So that square that indicates what we have taken. This parenthesis that indicates that what we have done earlier in the name of symbolization after having analyzed the transaction. So all these transactions have been taken into account, and 6,790. This overdraft and all minuses are taken minus 6,790, and under cash of debit side cash book that is supposed to be added is now deducted. So what we got, 6,690 again minus balance. But there is a note, what I have done, twice 40 rupees. But if bank charge of 20 is assumed to be entered in cash book, only if it is assumed as 20, then only 20 rupees is to be taken as the difference, so that the unfavorable balance as per passbook will be only 6,670 instead of 6,690. So understand this, I have taken it as twice. If once means not entered in cash book once, 20 rupees is instead of 40, it would have been taken as 20. So this is what I wanted to say in this question particularly, that taking the symbolization in a reversal manner. This is also overdraft, unfavorable balance as per here passbook, what we have taken, the cash book. So this is what a kind of bank reconciliation statement in which the complicacies are the undercast of debit side of cash book and this additions and deductions. What I have taken, all deductions are added here and all additions are deducted here. This is what I symbolized. Let us go. On 31/3/1982, the passbook showed a credit balance of 10,500. See here, there is a credit balance. Passbook credit means this is our gain or our plus balance, favorable balance. So passbook showed a credit balance. Take it as 1, and passbook is given. What we need to have, the cash book. Right. Let us see one by one. Now, the checks amounting to rupees 2,750 were deposited in the bank, but checks of rupees 750 had been cleared. So, what does it mean actually? Out of 2,750, the collection of checks which were deposited in the bank, but checks of 750 had been cleared. Only rupees 750 had been cleared up to 31st March. Whenever happened to receive the check, we would have entered the checks received as receipt and keeps higher the cash books balance. Whereas the same has to be deposited into bank, and bank's responsibility is to collect and credit our account which has been remitted in bank but cleared only up to 750, not the rest. So that for the rest of the amount of checks, it keeps passbooks balance lesser. What is the amount of that? You see here, 2,750, in which 750 alone be cleared. So what is the difference? 2,000 rupees. So come to the next. Checks amounting to rupees 13,500 were issued, but checks for rupees 12,000 had not been presented for payment in the bank. These are all the check amount we have received from our checks amounting to rupees 13,500 we have issued to the customers, but checks for rupees 12,000 had not been presented. So what do you mean by this transaction? That the checks were issued and would have been entered as a payment. So that bank column of cash book, we would have entered it as the payment, which keeps lesser the cash books balance or lower the cash book balance. But whom issued? Such people are the kind of people or the entities whom not remitted into their bank account, and from their bank account, our bank account is not asked for to be debited, so that these things that keeps our bank balance higher. What extent? 13,500 minus 12,000 means only 1,500 has been paid out, so that it has been entered in passbook as well as the cash book equally. But what has not yet been entered in passbook as payment? 12,000 rupees. So that we have to take it as the payment, and we will make it out in the process of BRS. Bank had been given a debit of 35 for sundry charges. This is a sundry charge or the expense which has been debited the account of the trader, that keeps the passbooks balance lesser. Whereas the cash books balance higher, though it has been entered in passbook, not yet been brought into the notice of the trader to be entered in cash book. Bank had received directly from customers 800 rupees and dividend of 130. See, whatever be the standing instruction to the banker to collect our securities, our investments income or interest or dividend from any kind of investments with the special or other entities, the bank is tend to collect. In those manner, the bank has collected now 130 rupees dividend from one kind of the security, which keeps the bank's balance higher but not cash book, and also bank has received directly from a customer whom we have rendered services. Such customer has given or remitted the amount in our bank account, that keeps our bank balance higher, whereas the cash books balance lesser. These both transactions, or both of these transactions, were not brought into the notice of the customer or the entity to be entered in the cash book. So come here and see the transactional analysis that shows here the checks amounting to rupees 2,750 were deposited. See, I am pointing now here 2,750 and 750 had been cleared up. Such 750 will not be the matter, only 2,000. So according to which that 2,000 is to be added, and 13,500, 12,000, in which 12,000 is the matter pertaining to the payment or unpaid, so that it has to be deducted. And bank has given a debit of rupees 35 for sundry charges that has been added, and bank had received directly from customers 800 rupees and dividend of 130 deducted. See, in that manner we have to see and take the transactions and put up in the reconciliation statement. So bank has given and bank has received directly from customers 800 rupees income, and income credited 35. But what we need to mind that this is a favorable balance of, so according to which we need to either arrive at the favorable balance of cash book or the passbook. We shall go here. See, 10,500 favorable balance, credit balance, so that all items are added now. Added here 2,035 and 12,535 is the total of the receipts, and checks issued but not presented for payment 12,000, direct receipt by the bank, and the dividend received entered only in passbook. These are all the receipts. Being they are the receipts, they are deducted here, so as to reverse the entry, keep plus, and the result is also plus, whereas minus, which is excess, which is greater than this, so that we need to take it as unfavorable balance. Here the difference is 13,500 versus 1,500. So do understand the balance that becomes minus, overdraft balance. So 12,535 the total, that is less than that of 12,930 of deduction. This is plus symbol, this is minus symbol. So what is excess result? Minus symbol result 395, which is the overdraft balance now we have taken. So with this, what we need to understand is that the balance as per passbook favorable started, ended with the balance as per cash book unfavorable. So started with favorable and finished with unfavorable. This is what to be highlighted now. Hope you would have understood the basic things and the procedures for the preparation and presentation of a bank reconciliation statement with the help of the above said illustrations.